Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Srishti Sharma. And we'll start with how the global markets have fared overnight and then go on to all the domestic cues that you must watch out for and also tell you about the stocks that you must keep on your radar today. But before that, Srishti, what a year it has been, and we're entering the final trading week of this year.
Yes, absolutely. And take a look at what this year has been, Kanishka, and especially the kind of rally that we have seen in the precious metals.
Absolutely. Whether it is tariffs, GSTs, precious metals, everywhere we have seen very significant, very interesting moves. All of these factors have contributed as far as this year is concerned.
Absolutely.
So yes, that's about some of the key factors that we saw during this year. But as we enter the last trading week of this year, let's see how the US futures are looking like. Now, they were little change, very flattish moves overnight after the S&P 500. That climbed to fresh record levels as traders head into the final stretch of the strong 2025. Now, futures tied to the S&P 500 and Dow, they edged slightly higher, while Nasdaq 100 futures, they hovered around the flat line. Now, remember, those muted moves follow Friday's session when the S&P 500 touched an intraday record of 6,945. That's before closing just below the break-even level. So yes, very flattish moves is what we saw on Friday. All of the three major indices ended in the red, but very flat moves over there. No major, moves in the red as far as the three major indices in the US are concerned. But it's been a banner year for the Wall Street overall. The S&P 500 is up 7.5% in 2025. The Dow has gained 14.5%, marking its strongest year since 2021, while the Nasdaq Composite, that has also led the way, rising more than 22% year to date. Now, markets are also in the midst of the Santa Claus rally period, historically one of the strongest stretches for equities. Now, since 1950, the S&P 500 has averaged gains of about 1% during the final 5 trading days of the year and the first 2 sessions of the new year. So yes, that's about Wall Street. But now, looking ahead, the economic calendar is relatively light this week. However, the street will be watching for Federal Reserve closely, with the minutes from the central bank's December meeting due on Wednesday. So yes, let's watch out for all of that, as policymakers are likely to give some cue into the markets ahead in 2026. So yes, that's about market moves and all the factors that are driving the markets. But Srishti, what about cues from the commodity front?
Quite interesting, Kanishka, because the top story of the day remains to be the Trump comments with respect to the peace talks between Russia and Ukraine, and a bit of an impact of that on the crude oil prices is what we are getting to see. As of now, crude is trading almost 1% higher when it comes to the Brent oil prices. But other than that, when it comes to the gold prices, very fantastic moves over there, because we have seen the last particular week very strong for the gold, as well as when it comes to the silver prices as well, and gold heads for the strongest annual gain since 1979. But when it comes to silver, just on Friday, we have seen silver on an intraday basis gaining almost 7 to 8% and really reaching that mark of $82 per ounce mark, which I don't think that anybody was expecting. But for today, it's a bit of a retreat that we are getting to see. But along with that, it's platinum that is seen to be dropping as of now, because all throughout this year, even platinum has gained almost 100%, and that's the kind of annual surge that we have seen. But coming back to the silver prices, silver remains to be on fire. The white metal surged as much as 9% to a fresh record high near to that $82 an ounce mark, taking gains to about 170% this year, driven by supply deficit and booming industrial demand. However, this morning, the metal slid by nearly about 3%, back to near that $77 per barrel mark. But this rally is broad-based. Now, gold hit a new peak above that $4,549. Platinum jumped almost 10% to records, and palladium soared over 14% in a single session. So great moves when it comes to the commodity world.
Absolutely great moves as far as the precious metal sector is concerned. But now let's get you some top global stories that we're tracking this morning. Now, first up, Donald Trump says that the Ukraine peace talks are a lot closer after meeting President Zelensky in Florida. Now, Zelensky has called it a really great discussion, saying that US and Ukraine security guarantees are agreed, though Trump sounded more cautious on the other hand. Now, both have admitted tough territorial issues remain. Trump has also spoken to Vladimir Putin and plans more calls going forward as diplomacy gathers pace amid continued Russian attacks. Listen in to all the comments coming in.
Russia wants to see Ukraine succeed. Once it sounds a little strange, but I was explaining to the president, President Putin was very generous in his feeling toward Ukraine succeeding, including supplying energy, electricity, and other things at very low prices. So a lot of good things came out of that call today. But they were in the works for 2 weeks with Steve and with Jared and Marco and everybody.
Did Russia agree, or did Putin agree to a ceasefire to allow a referendum to take place?
Not a ceasefire, and that's one of the points that we're working on right now. No, not a ceasefire. He feels that, look, you know, they're fighting and to stop, and then if they have to start again, which is a possibility, he doesn't want to be in that position. I understand that position.
And Trump is set to meet Israeli Prime Minister Benjamin Netanyahu at Mar-a-Lago to push the next phase of the stalled Gaza ceasefire plan. Now, talks will also focus on Iran and Hezbollah in Lebanon, while Washington wants a transitional administration and international force in Gaza. Israel and Hamas accuse each other of breaches, with the disarmament and withdrawal still the toughest hurdle.
Moving on, Bank of America CEO Brian Moynihan says that he expects the Trump administration to de-escalate trade tensions in 2026 after tariff shocks in 2025. Now, BOFA now sees average tariffs settling near that 15% mark, not rising further, though China and North America, they remain wildcats. Now, he has also said that tariff worries are easing for small businesses, with labor shortages now big concern.
And moving on to some stories from China, where China is signaling a more proactive fiscal push for 2026, with Beijing pledging to boost consumption, back tech and innovation, and strengthen its social safety net, while likely sticking to near 5% growth target. But the slowdown is visible. Industrial profits rose just 0.1% in Jan and November and fell over 13% in November alone, highlighting weak demand and cost pressures.
All right, so those are some of the top global stories that we're tracking this month. Opened up in the final trading week of 2025, and it's a rather mixed day coming in on the Asia-Pacific front. If you look at China's Shanghai index, that is trading absolutely flat, but with a tinge of green over there. 3,965 is where it's trading. Hong Kong's Hang Seng Index, that's the one that's actually leading the moves, up about 0.7%, 26,000. That's the level that it's holding on to. So yes, good moves over there. But if you talk about Japan's Nikkei, that's actually trading in the red, down about 0.5% right now, 50,494. That's the level where it is trading at. So yes, very mixed kind of moves as far as the Asia-Pacific front is concerned. Australia's ASX 200, that's also trading in the red, absolutely flat, but yes, trading with a tinge of red right now. 8,750. That's the level where it's trading at. And apart from that, South Korea's Kospi Index, that's actually leading the gains, up about 1.5%, 4,200. It's very close to that level. So good moves on the Kospi Index. So yes, that's about the Asian indices. But if we talk about Nifty, we managed to end just above the 26,000 level. We started on a very strong note last week, but towards the end of the week, we sort of lost that momentum and ended just above the 26,000 mark. But for today, we are expecting yet again a very mildly positive start, up about just 28 points on the Nifty implied open. So yes, Srishti, looks like we're in for a start in the green, but a very mildly positive start.
Yes, seems like everybody is in the holiday mood and trading on very low volumes, Kanishka. But indeed, there is a lot of stocks. There are indeed a lot of stocks that are going to be in focus today. So let's get started with highlighting all the counters that you should be watching out for. And firstly, let me take it across to my colleague Rabinder, who's standing by with a list of stocks in focus today. Good morning, Rabinder.
Well, as on the back of acquisition, Coforge can be in focus, where company has signed a definitive agreement to acquire a 100% stake of Encora for rupees 17,032 crore at an enterprise value of $2.35 billion, and the board has also approved raising up to rupees $550 million via QIP to repay Encora's term loan. So, back of this acquisition, Coforge can be in focus. Another stock that can be in focus is Punjab National Bank, where bank has reported a borrowing from fraud worth of rupees 2,434 crore to the RBI involving the erstwhile promoters of SREI Equipment Finance and SREI Infrastructure Finance. So back of this, PNB can be react negatively. Aurobindo Pharma can be in action where companies arm Curatech Biologics terminates its agreement with the Biofutura in US relating to BFI 751, and it is a proposed ustekinumab biosimilar to Sterela. NBCC can be in focus where company to receive a 21.23-acre land parcel in South Delhi as a part of settlement with the Delhi government, and the company plans to develop a mixed-use real estate project on the site with the estimated revenue potential of rupees approximately 8,500 crore. Titan can be in a focus where Titan for company to first open its LGG store under the brand Beyond to open in Mumbai today. And lastly, Vedanta can be in focus where company has been declared the successful bidder for the depot graphite vanadium block under the critical mineral auction. So back of this, Vedanta can be in focus.
All right, lots of stocks to track today. Thank you, Rabinder, for that list. But that's not all. Lots of other stocks as well that we're tracking in trade this morning. And first up, let's talk about Solar World Energy. Now, this one has received a letter of award for an EPC package. This is for a 250 megawatt AC grid-connected solar PV project. Now, the project is worth about 725 crore rupees, and it's from NTPC Renewable Energy. So yes, a big order win is likely on the cards for Solar World Energy. It has already received the letter of award. So yes, positive news flow over there, and we'll watch out for how the stock reacts. Next up, let's talk about Timex Group. Now, this one is going to be in focus because the promoter, Luxury Watches BV, has decided to sell 8.9% stake via an OFS on December 29 to 30. That is today and tomorrow. This is the period in which the OFS will be done, so we'll watch out for that as well. Next up, let's talk about Seagull. Now, this one has also received an LOA of nearly 1,100 crore rupees from MP Road Development Corporation. So, this is also going to be in focus. Now, apart from this, there are lots of stocks for which the lock-in period ends today. The likes of Ventive Hospitality, TrueAlt Bioenergy, Jin Kushal Industries, EPAC Prefab Tech, all of these counters are going to be in focus because their lock-in period ends today. And lastly, there is Fusion Finance, which is going to be in focus because the company's board is expected to mull fundraising later today. So let's watch out for all of these counters in trade.
All right. We have all eyes on all of these stocks, but moving on to another news flow, and Gautam Adani inaugurated the Sharat Chandra Pawar Center of Excellence in Artificial Intelligence at Baramati in Maharashtra's Pune district on Sunday. Now, the Center of Excellence, funded by the Adani Group chairman, has been established under Vidya Pratishthan and the Educational Institute governed by the Pawar family. Adani Group has entered into a transformative partnership, formally signing an MOU with Vidya Pratishthan Baramati to enhance AI collaboration. Stressing the importance of AI as a future technology, Gautam Adani said this partnership is a commitment to build applied technological capability where AI research, engineering and execution move together in an integrated fashion. Listen into that.
I can confidently say that artificial intelligence will now represent the next and far more powerful leap. Because if mobile gave Bharat greater access, AI will give Bharat greater capability. Let me explain. Jan Dhan and UPI enable financial access and inclusions. Aadhaar established digital identity, and mobile connectivity allowed us to leapfrog decades of physical infrastructure. And now AI is set to become the fourth foundation, embedding capability, decision-making, and productivity into every corner of the nation. Imagine that over this decade, as 1.4 billion Bharatiya start to carry AI-powered intelligence in the palm of their hands, progress will no more be linear. It will compound, accelerate, and explode. A farmer will no longer be just a cultivator, but become a one-person enterprise using AI to read soil and crop health, anticipate hyper local weather, optimize inputs, negotiate prices, manage logistics, and hedge risk in a real time. A homemaker in a tier 3 town will be able to create and scale a global micro brand using nothing but her voice, while AI designs products, ensures compliance, runs marketing, manages supply chain, and handles payment seamlessly in the background.
All right, so those are the latest comments coming from Gautam Adani. But moving on, let's shift focus to the banking space. Now, RBI's latest data shows that credit still is racing ahead of deposits. Bank loans are up about 12% on a year-on-year basis, while deposits trail at 10%. That's near 200 basis points of gap. Ankur Mishra, my colleague, is here to take us through the number crunching.
Yes, credit growth has outpaced the deposit growth as far as the new data which has emerged from Reserve Bank of India as on December 12. We understand that the credit growth has been around 11.7% if you take the latest fortnight data. But if you compare with the deposit growth in the same period YOY, that has been 9.7%. So 200 basis point gap is there, whereby if you compare with last fortnight, there is a lag as far as deposits are concerned, because in the 15 days period from November 28 to December 12, the deposit growth, which was more than 10%, has come down to 9.7% now. In terms of if you quantify the same, that is around 45,000 crore deficit in terms of deposits. But if you talk about credit growth, that has increased more than 1 lakh crore in the same period. So all in all, Reserve Bank of India has already been taking steps to address the liquidity in the system if at all there is a deficit. But now the data is showing that there is some kind of divide between credit and deposit growth, and that gap is around 200 basis point. And we need to also wait and see how much of the whole year data is there till 31st of December 2025, because that will be interesting to take a note on how the full year has been for banks this year. But more importantly, we need to see what banks are doing to protect deposits, and also whether or not they are going to reduce rates.
All right, thank you so much, Ankur, for highlighting all those details. But sticking with the banking sector, and the stock in focus is PNB, as the company has reported a 1,200 crore borrower fraud to the RBI against the erstwhile promoters of Sri Equipment Finance and Sri Infrastructure Finance. Now, the bank has already made 100% provisions for the exposure. Once again, let me take it across to Ankur, who joins in with more details and give us the clear context. Ankur.
Yes, Punjab National Bank has now reported fraud to Reserve Bank of India in case of Sri Group companies. These two companies are Sri Equipment Finance as well as Sri Infrastructure Finance. Now, if you talk about the amount of the fraud, that is 2,434 crore. But more importantly, these accounts were already provided by the bank earlier, and now this is an exercise which is done by the bank to report these frauds to Reserve Bank of India. More of a procedural thing because the company is already provided, so there is no impact on balance sheet per se right now. And also, if you talk about these companies, this has already been resolved through NCLT. and NARCL has taken over the debt of Shree Group companies 2 years back. So now PNB as a procedure has reported these two frauds to RBI. Now we may see some action which can be taken by investigative agencies, but all will depend on the assessment by Reserve Bank of India and action which can be taken by investigative agencies against the former promoters, which has been named by Punjab National Bank.
All right, so lots of updates from the banking space, but now let's shift focus and see what's happening in the primary markets. And quick commerce major Zepto has filed confidential draft IPO papers with SEBI, opting for pre-filing route for flexibility in valuation and timing. Now, sources have indicated to ET Now that the issue could be worth around 11,000 crore rupees. Ankur is back with us to take us through the details.
Yes, sources say that Zepto has filed confidential papers with SEBI for its IPO. Now, SEBI gives option to companies whereby they can choose to go for DRHP with the confidential route, whereby you do not disclose the details in the initial stage, and later on when RHP is revealed, you get to know all the details about the IPO, how much is the size and other details. And Zepto has chosen that option, and we have been told that the DRHP has been filed on Saturday. Sources are also revealing that IPO is likely to be close to 11.5 to 12,000 crore. However, all will depend on market condition, and company will take a call closer to the RHP filing how much of the fund it actually wants to raise. But we have been told that it will be mix of OFS as well as fresh issue. Now, when is the timing for IPO? We have been told that it can be between April to June period in 2026, but it will be interesting to see what is the company revealing regarding its losses, because FY25 numbers say that company's revenue was close to 9,600 crore, but more importantly, the losses were widening. So we need to wait and see whether or not the efforts which has been made by the company has actually resulted in the narrowing losses, and that will be keenly watched out by the market participants in the IPO details.
All right, thank you so much, Ankur, for getting us all those details. But year 2025 was a year that tested market resilience. Now, from global geopolitical shocks and volatile commodity cycles to shifting rate expectations and record domestic participation, Indian markets navigated a complex landscape. As we turn the page to 2026, the focus now shifts to what will continue to drive momentum and what could pose fresh risk. Let's break it down, the key factors that move the markets in 2025 and the big themes to watch out for in 2026. Ashesha joins in with just that.
Well, yes, as 2025 comes to an end, we decided to take stock of the big factors that moved the markets in this calendar year. And the first and the most important one was Trump tariffs. Remember, US President Donald Trump imposed tariffs at the rate of 50% on India. This was in the month of August. Negotiations are underway to reduce this tariff rate lower from 50%, but there has been no outcome so far. This impacted several sectors, including textile, gems and jewelry, pharma and seafood. These were the four sectors which were most impacted on account of the tariffs that were imposed by US administration. The negotiations, as I mentioned, are currently underway. We are expecting an outcome anytime soon. But so far, this continues to remain a headwind for Indian equity markets. Perhaps we will see some outcome in 2026. Let's also talk about the big consumption boost by the Indian government, where in budget last year, the government went ahead and provided relief on income up to 12 lakh rupees. So that was one big trigger. And GST rate rationalization, which came in the month of September, which came into effect on the 22nd of September. These were the two big triggers that helped aid consumption and will perhaps likely aid consumption in 2026 as well. Meanwhile, geopolitical uncertainty, this continues to remain of play and a factor to watch out for in 2026 as well. Conflicts in West Asia continue. There is no end in sight, although US President Donald Trump had claimed that most of these tensions will ease. That has likely not happened. FII exodus, another factor to watch out for. Remember, foreign institutional investors sold shares worth nearly 3 lakh crore from Indian equity markets in calendar year 2025. Fed action, expensive valuations and risk aversion. These are the three factors which led to FII exodus from Indian equity markets. So yes, several factors which continue to remain at play going forward as well. Another factor, monetary easing. Remember, Federal Reserve cut rates by 75 basis points in calendar year 2025, and RBI also cut rates by a whopping 125 basis points over the last 1 year. So that's the kind of monetary easing that we have seen not only in the global market but for Indian economy as well. But remember, primary market action continues. Primary markets raised nearly 1.7 lakh crore rupees in this calendar year, and the pipeline for 2026 also continues to remain very solid. We have a whole host of IPOs lined up, including Reliance Jio. That will be one big IPO that the market will be watching out for. But as we step into 2026, let's talk about the important factors that you need to keep on your radar. First, of course, is geopolitical developments and the kind of developments that we see over the next few months. Fed action, monetary easing is likely to continue going forward. Earnings recovery, FII flows and consumption demand, and how that is likely to pan out going forward. So yes, several factors which were at play at 2025, and these are the 5 things that you need to watch out for as we head into 2026.
All right, so lots of factors that impacted 2025 and lots to watch out for in 2026 as well. But now, time now to take a look at the real estate space. Now, after nearly 5 years of uninterrupted growth, India's real estate sector is entering into a phase of transition. ET Now spoke to a leading real estate expert to decode the signals of peaking demand in 2025 and what lies ahead for the market in 2026. Let's take a look.
The year 2025 has emerged as a clear inflection point for India's real estate market. After consistent quarter-on-quarter growth since 2020, the sector now appears to be consolidating. Data from the last 3 quarters of 2025 shows residential sales declining by nearly 7 to 8% from peak levels. Experts say this does not indicate a slowdown but a plateau after years of strong momentum. One of the key factors behind this consolidation is the sharp fall in the new project launches. After unprecedented expansion over the past 3 to 4 years, fresh launches have dropped by nearly 17 to 18% as reflected in the recent RERA registrations. Lower supply has in turn impacted sales volumes.
So the market has shown peaking points when it comes to the sales. That kind of thing, and then the new launches which has been unprecedented and has been showing a growth all along the quarters of last 3-4 years have also shown a decline, and in the recent quarters number as per RERA registration also shows a decline. So there is a decline in the new launches resulting into decline in sales. So the sales and new launches both are down sliding.
On pricing, the market remains largely stable. North Indian cities have witnessed stronger price appreciation, while most other regions recorded moderate growth in the range of 0 to 5%. Experts rule out any sharp correction and expect price stability to continue. Looking ahead to 2026, the outlook remains cautious but stable. Sales could face mild pressure in the near term with a possible downside of 1 to 2%, mainly due to fewer new launches. However, experts stress that the broader market fundamentals remain intact. A significant shift is expected across segments. Luxury housing, which dominated the last 2 to 3 years, is showing signs of saturation. In contrast, affordable mid-income housing is expected to drive the next phase of growth, particularly in Tier 2, Tier 3 cities, which have lagged metro markets so far. Easing monetary conditions are likely to support this transition. Interest rate cuts totaling 125 basis points in 2025 are expected to improve affordability and boost demand, especially in non-metro markets.
The year 2025 was extremely positive for the sector overall. Normally, we see that growth is confined only to the tier 8 cities. Your tier 1 cities, the 8 cities, only normally the metro cities see the growth. But this time, there was growth across in tier 2, 3 cities also, and which is extremely positive for India as a story, because now growth is not confined only to the metro city.
In essence, while 2025 marked a year of peaking and consolidation for Indian real estate, 2026 is expected to be a year of stability and rebalancing, where growth broadens beyond luxury housing, shifts towards affordable and mid-income segments, and becomes more geographically diversified with sustained strength in commercial real estate.
All right, so that was a lowdown on how did the real estate sector pan out in 2025. But we will carry on with more updates on the aviation space. But before that, we have my colleague Shivani with a roundup of how the sector fared in 2025.
Now, 2025 was supposed to be the year when India's aviation sector truly took flight, with record orders and also record 170 million plus passengers and a brand new airport in Mumbai. The horizon looked clear. But instead, the industry hit a severe stress test. The darkest moment came in June when Air India flight AI 171, a Boeing 787 bound for London, crashed shortly after takeoff in Ahmedabad. 260 lives, as you can see on the screen, were lost. Now, preliminary reports, in fact, pointed to a catastrophic engine fuel cutoff, forcing a nationwide reckoning over the maintenance and pilot training protocols. Then came December. The largest carrier, which is Indigo, saw a system collapse. Thousands of flights were cancelled as new stricter pilot rest rules meant to fight fatigue collided with a lean workforce. At its peak on December 5th, 1,600 flights were grounded in a single day. The regulator DGCA was forced into corner, granting temporary exemptions from safety rules to just keep the planes moving. Experts say that, in fact, there was a gap in the manpower and the workforce, and we will require 11,000 new pilots by 2030 just to keep pace with this growing sector. But it wasn't all turbulence only. Infrastructure saw a historic win. Now, on December 25th, the Navi Mumbai International Airport opened for commercial flights. It is very important because Mumbai now is a dual airport city, a critical relief for the most congested airspace in the country. Innovation also took root. SpiceJet placed landmark orders for 100 blended wing aircrafts, and global startups like Nautilus moved into Mumbai, signaling that despite operational strain, in fact, the scale of the Indian market remains irresistible and robust for global investment. This year, government also granted no objection certificates to several new carriers, marking one of the most significant moves in years to challenge the long-standing dominance of Indigo and Air India. Approved airlines such as Al Hind Air, Fly Express and Uttar Pradesh-based Shank Air are expected to begin commercial operations in 2026, focusing on boosting, of course, the regional connectivity and offering more choices to the domestic travelers. So as we head into 2026, the lesson of the past year is clear. Infrastructure of the industry is important, but safety and staffing are its soul. India is now world's third largest domestic market, but it's a market that has learned the hard way that you can't fly solely on growth alone.
All right, so that's all about the aviation sector. But now let's bring you an exclusive conversation. ET Now Sajid spoke to Nestle India's chairman and MD, Manish Tiwari. Now, Manish spoke on what the company expects in the third quarter and what lies ahead for the sector itself. Let's take a look.
Last quarter, we had a double-digit value growth, and in 4 out of 5 businesses, we saw very high single-digit or double-digit volume growth also. So, I believe for the entire sector, growth would be led by volumes.
And so value growth would be in double digit because pricing may not be so, going up unless there is a raw material price increase significantly here.
Yeah. No, you're right. We are not expecting too much of pricing increases, at least for our businesses. And I could sort of say it for most of the foods businesses also. We won't see too much of price inflation, and therefore bulk of the growth, I would say 70% of the growth should come from volumes.
All right, moving on and back to some of the stocks that you should be watching out for. An IT services provider, Coforge, is going to be in focus today as the company is all set to acquire Encora for an enterprise valuation of $2.35 billion. Now, Encora is a US-based AI native engineering services company and works with Fortune 500 and digital native companies. Now, my colleague Ishika is here with more details about this particular deal.
That's right. Coforge acquires Encora, a US-based AI-native engineering services company in an all-stock deal. Now, the total enterprise value of this company or transaction is at US $2.35 billion, and the sellers are including Advent International as well as Warburg Pincus. Now, the target company Encora is founded in Silicon Valley and already works with Fortune 500 companies and has its own agentic AI platform. Now, talking about the transaction structure, now the equity value of this deal is $1.89 billion, which will be paid only in the form of equity shares to preferential allotment by Coforge, and the issue price of this is fixed at 1,815 rupees per Coforge share, which is an 8.5% premium to the prevailing market price. And there will also be a bridge loan or a QIP of roughly $550 million to retire the term loan in Encora, and this acquisition of Coforge of Encora will create a US $2.5 billion tech services company with AI-led services as the core engine. Now, talking about the synergies of this acquisition, the synergies are primarily revenue-led with margin support rather than cost-cutting. It includes AI-led growth, cross-selling opportunities, vertical scale-up, especially healthcare as well as high-tech verticals. We also have nearshore leverage as a synergy, and US expansion as well as margin support. Now, Encora's 19% EBITDA margin helps avoid any EPS dilution post this acquisition. Back to you.
Right, thanks, Ishika, for taking us through the details of the acquisition. But let's also take a look at what the brokerages are making of Coforge's acquisition of Encora. Now, many of the brokerages, they've continued to maintain their buy call and given a target price as well. Now, Centrum Research, for instance, has maintained its target price of 2,179 rupees. Nuvama has maintained 2,250, whereas MOSL, that continues with its 2,500 rupees target price. But it's also important to watch the commentary coming in from the brokerages as far as the acquisition is concerned. Now, Nuvama, for instance, says that Encora is going to further accelerate Coforge's growth, and it will also provide scale tech while filling white spaces transition. And it's smartly structured a deal with share swap, and it reflects confidence that PE firms have an estimate, and this transaction is going to be marginally diluted by about 2%. So yes, that's the word coming from Nuvama. But if you talk about MOSL, that has said that Encora is going to add capability and depth to Coforge. Now, this integration is a key monitorable going forward, and it has also highlighted some of the management comments saying that the transaction could be EPS accretive from day one. So yes, good commentary coming from MOSL as well. So yes, that's the latest that we are picking up. If you talk about Centrum Research, they have said that the acquisition offers deep synergies. Now, Encora has deep expertise in AI-led engineering. Encora would give the much needed scale that Coforge needed, and it would offer about $2.5 billion of revenue run rate. So yes, that's the latest commentary coming in from brokerages on Coforge. So yes, that's going to be the stock to watch out for today.
All right, all eyes on that. But with this, let's move on and let's shift focus to the defense sector, because sources tell ET Now that Defense Minister Rajnath Singh will chair the Defense Acquisition Council meeting today, where deals worth over 80,000 crore could be approved. My colleague Srinjoy Chaudhary joins in with more details from this one. Srinjoy.
the Defense Acquisition Council, which is headed by Rajnath Singh, the Defense Minister, meets today. And a lot of items are on the agenda. And this has enormous value. The total value will probably be over 100,000 crores. The first issue that will come up really relates to emergency procurement, which happens during crises. Now, Operation Sindoor has just happened a few months ago. Now all the three armed forces are allowed to purchase weapons very quickly, without trials, without other bureaucratic ways, and getting them a certain amount as quickly as possible. Now, that stopped on the 19th of November. There is a proposal to have that emergency procurement for another month. This is particularly important because a large number of deals are still being negotiated, and at least these will go through when there is an additional month. Besides that, the armed forces are looking at new weapons or weapons that India already has and more of them. For instance, the MR-SAM. Now, the MR-SAM is a surface-to-air missile, and the Navy wants 752 of them. That is on the agenda. The Navy also wants tugboats. Now, tugboats are particularly important for warships and submarines entering and exiting harbors. So the Navy wants 10 of them. The Army is looking at overhauling 200 of its T-90 tanks. That is on the agenda. Besides that, the Army is looking for radars, low-level, lightweight radars. That too is very important. As far as the Army is concerned, there is the SPICE. Now, the SPICE is particularly important because it guides weaponry to the target. Now, the Air Force has a requirement for the Astra. Now, the Astra is an air-to-air missile. Now, that has a range of about 100 kilometers. Now, what the Air Force wants is to increase the range of the Astra 2. And the Astra 2 will have a range of about 200 kilometers, which will help its fighter pilots. So a lot really on the agenda. And all important members of the Defense Ministry will be there, whether it's the CDS, whether it's the Minister of State, whether it's the three service chiefs, whether it's the Defense Secretary, whether the DRDO chief, all of them will be present at the meeting, and it promises to be a very important one.
All right, so the big defense push is likely today. The DSC Council meeting is going to happen today, and we'll watch out for how the defense stocks actually react to all of these developments. So yes, defense counters is something that we'll be focusing on. But time now for a very quick break. We'll be right back to take you through more Market Cafe, and it's time now to talk about Titan, which has announced its foray into lab-grown diamonds with the brand Beyond. Now, brokerages have come out with reports on their views on what they are making of this move coming from Titan. Snehi is here to tell us what Citi is making of the new foray.
Well, absolutely. So Titan is going to be in focus today because remember, on Friday they announced their foray into lab-grown diamonds, and today they are going to be launching their first store in Mumbai under the brand Beyond, and they are going to gradually be adding more stores in Mumbai and Delhi in the near future based on what the response is. So now we have a mixed reactions, a bag of mixed reactions coming in from brokerages. First up, let's talk about Citi. They've maintained their neutral rating, target price at 4,125 rupees per share. They don't expect this new Beyond brand to drive any meaningful business or any meaningful earnings growth for Titan. They believe that the foray into this lab-grown diamond segment may pose risk to valuations as well as their business, because remember, Titan is traditionally a natural diamond and a gold business. Titan's admission of LGDs threatens their natural diamond base is what they believe, and this foray comes as a negative surprise to them because remember, just in August of this year, Titan has announced a collaboration with the De Beers group that is known worldwide for their stance on natural diamonds versus lab-grown
grown. So that is surprising, and that's a conflict coming in terms of strategy. They believe store economics for lab-grown diamonds retailing in India will be subpar, so that is their view at best, and they expect the LGD retailing space to remain competitive going ahead. So on the back of all of these reasons, Citi continues to maintain a neutral stance with a target price of 4,125 rupees per share. Post this announcement, we also have views from Investec wherein they maintain their buy rating target price at 4,248. And Morgan Stanley continues to be bullish, maintain their overweight rating with a target price maintained at 4,062 rupees per share. So that's the take on the brokerages, a reaction coming in on Titan's announcement into the lab-grown diamond segment.
All right, thank you so much, Sneh, for getting us all those details. Let's watch out for Titan in trade today. But with this, viewers, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and Kanishka and the entire team who put this show together. Thank you so much for tuning in.